to my class. Last lesson, you learned the meaning of consumer right, redress, consumer redress, ways of seeking redress, and the benefits of seeking redress. In this lesson, I'll be teaching you on trading profit and loss account. By the end of the lesson, you should be able to give the purpose of trading profit and loss account, the meaning of trading account, and the meaning of profit and loss account.
Today's class, we'll be learning trading account, profit and loss account. Trading profit and loss account is usually prepared at the end of a financial year, which is usually 1 year. And the purpose of trading profit and loss account is to first of all show whether a business has made a profit or loss over a financial year and determine how the profit and loss arose. Trading account is prepared to determine the business profit or loss. And this profit is what every organization intends to get before going into the business. Now, in trading account, it is calculated to determine the gross profit. What is gross profit? Gross profit is the excess of sales over cost of goods sold. And to get your gross profit, all you need to do is your sales minus cost of goods sold. And whatever value you got is referred to as gross profit. The next we are looking at after gross profit is gross loss. Wherever there is profit, it could either be a profit or a loss. Gross loss is the less than cost of goods sold. You can also achieve this by minusing the cost of goods sold from sales. And from there, it will help you know whether you made profit or loss. Loss here indicates there was no profit at all. Now, to get the trading account, we have to look at our opening stock. What is opening stock? Opening stock refers to the goods you have in your store at the beginning of the financial year. When you have these goods, it's possible these goods will not be enough. So all you need to do is to buy more goods and add to it, and this is referred to as purchase. Purchase is referred to as the goods bought and added to the opening stock. When you add your purchase to the opening stock, it will enable you have the cost of goods available for sales. When you have the cost of goods available for sales, it will lead you to closing. Closing stock here refers to the goods available at the end of the financial year. When you bring in your opening stock, you add your purchases, you have the cost of goods available for sales, and then you deduct your closing stock. After deducting the closing stock, it will bring you to the cost of goods sold. And after that, you minus the sales from the cost of goods sold, and that will give you gross profit. And then we'll be looking at profit and loss account. Profit and loss account is calculated to help us determine our net profit or net loss. Trading account, do not forget, it is calculated to help you determine your gross profit or your gross loss. But for profit and loss account, it is calculated to enable us determine our net profit or net loss. In transactions, definitely there will be a profit, and sometimes it could be bad and will have loss. So in profit and loss account, you do that to know your net profit or net loss. But I want you to take note of profit and loss account. In this account, we have debit and credit. Your left from your note is debit and the right is credit. Then we have net profit. Net profit is referred to as the profit gotten from profit and loss account. All right? When there is profit, that means the credit side of the account is greater than the debit side. It is referred to as net profit. I hope you are following. And the next is net loss. Net loss occurs when the debit side is greater than the credit side. Do not forget, in profit and loss account, we debit all expenses and then we credit all incomes. Expenses are debited. Expenses here can be referred to as the rent you pay, the rates you pay. When you print, you are paying. When you are paying electricity bill, it is expenses. And so, in profit and loss account, whatever has to do with expenses has debited. I hope you're following. When you make repairs, it is referred to as expenses. So it has to be debited. This is talking about profit and loss account. Do not forget that whatever has to do with expenses must be debited. All right. Example of this is could be called stationery, repairs. When you are advertising, you are spending. All right. Bank charges, you are spending. So it has to do with expenses, has to be debited. And on the other side of the profit and loss account, there is what is called the credit. Here on the credit side of account, we normally credit all incomes or revenues. Incomes and revenues are credited. Example of these incomes are, do not forget that profit and loss account, let me bring this to your notes, that profit and loss account is calculated after trading account transaction has been achieved. Then you go ahead to calculate your profit and loss account. So when it comes to revenues or incomes, they are to be credited. All right? You credit your incomes. And this income could be referred to as, for example, discount received is regarded as income because you are receiving as an organization, so it should be credited. All right? Another example that has to be credited on the right side of this account is interest received. When there is interest received, it should be credited. Another point we are going to be looking at here is commission received. When you have anything you are receiving, it has to be credited. Do not forget that your income here refers to either the money you received or the gain you made over sales. All right? When you receive, it should be credited. Commission received is an example of another item that is supposed to be credited in profit and loss account. All right? Then this commission received means an organization received certain commission, either from whatever other firm, organization they are making purchases. They received this commission and it has to be credited. All right? And do not forget that incomes or revenues are to be credited. Then expenses are to be debited in profit and loss account. Once again, operating expenses are to be debited and incomes or revenues are to be credited in profit and loss account. All right? And the last we'll be looking at under income is rent received. If you have a building and people rent for business, definitely they will have to pay. And when they pay, it means you are receiving from this rent this persons have paid to you. And so it is to be credited. And then we have format for imputing this trading account. In trading account, do not forget, everything has to be documented, beginning with opening stock, the purchases, cost of goods available for sales. You deduct your closing stock, and then it will give you cost of goods sold. And then you minus it from the sales, and you get your gross profit. But for profit and loss account, once again, do not forget that all expenses are to be debited and incomes or revenues are to be credited. Expenses debited, incomes credited. Have this at the back of your mind, and do not forget that profit and loss account can only be done after trading account has been calculated. All right, this will bring us to the end of today's class. Ensure you watch and understand before you answer your questions. See you.
Welcome back. I'm sure you have learned the meaning and the purpose of trading profit and loss account, which is to determine if the organization is making profit or loss. You have known what trading account is. That will help you determine your gross profit or gross loss. And of course, profit and loss account is determined to show your net profit or net loss. That'll be all for this class. I'll see you next class. Please stay safe.